There's a popular YouTuber here on the platform with over 300,000 subscribers that posted publicly that they ended up missing out on hundreds of thousands of dollars of profit. We're going to talk about who it was and what we can learn from it in this video. But first, if you're new here, thanks for being here. I'm Austin. I'm a co-owner of cloudmusicsuite.com. I'm a stock market investor, and most importantly for this video, I'm a shareholder of Palantir, and I'm a very proud shareholder of Palantir. The channel's somewhere in the 1,000 subscriber range. We passed that benchmark last week. If you're one of those people, thank you so much. If you're not one of those people, click that subscribe button and drop a like for me. As a thank you for doing those two things, here's a picture of both my cats, Millie and Luna. Millie's the gray one, Luna's the brown one. They thank you for subscribing. Okay, let's get into this. Chicken Genius Singapore, who's here on YouTube with over 300,000 subscribers, bought Palantir, $300,000-ish worth of Palantir stock at $7.41. That's a great entry price for Palantir. So good job to him for buying into that weakness and getting that great cost basis. But he actually sold out of Palantir somewhere around the $10 range. And he made a video on YouTube that said, hey, I made $100,000 of profit with Palantir. Check it out. Here are the numbers. So he booked $100,000 of profit. That's great. That's awesome. There's a saying that says, no profit is a bad profit. But what we miss in this situation is that he actually missed out on over $450,000 worth of profit. He could have doubled his money and then another 50% on top of that if he would have held until yesterday. This stock has got a year-to-date return of 178% right now, and I see that moving higher, believe it or not, as we move through the next few quarters and they post more and more quarters of GAAP profit quarter in and quarter out, and probably get included into the S&P 500 within the next 3 to 5 quarters. One thing that's really interesting about Chicken Genius's sell is actually that he lives in Singapore, I assume, and that means he has to pay zero capital gains tax. There is no capital gains tax in Singapore. There's no short-term gains tax. There's no long-term gains tax. So he was able to take that $100,000 of profit and not have to pay any tax on that. So that's super sick. But I actually think the short-term gains tax is a benefit to investors who have a long-term outlook. If you have a long-term outlook, you are discouraged from selling a stock within a 1-year period. For example, I have shares of Shopify right now. I bought at the literal bottom, somewhere around $26 a share last year, October 2022. I've considered selling that stock multiple times, but one of the reasons I haven't is one, the company fundamentals are still getting better, so I'm just gonna hold for now. But two, I would have to pay short-term capital gains on my profit from those Shopify shares that I sell. I really don't want to do that. The short-term gains are just at your ordinary income. I do not want to pay that much tax on my gain. So I'm at minimum going to hold for at least a year. So somewhere around mid-October time, I might consider selling Shopify shares. We'll see how the business is looking then, and I'll reevaluate when the time comes. But instead of hating on Chicken Genius, I would rather like to use this as a cautionary tale to all investors and myself. It's a nice reminder to myself that when you have the opportunity to buy a transformational company that's the leader in their space, that has the best product in their space, they're the market leader, they're taking market share, they're expanding their business, they're expanding all the sides of their business. For Palantir, that's the government side and the business-to-business side. They're launching new products, their fundamentals are improving quarter in and quarter out, they're free cash flow positive, they're EPS positive, they have an amazing balance sheet, they have an amazing management team. All of that with the fact that they have a best-of-breed product just signals to me that we do not sell companies who fit all those criteria. It's almost like Tesla. Tesla fit pretty much all those criteria, and a ton of people sold out with 100% gain, a 200% gain, a 300% gain. Am I hating on those people? No, 100%, 200%, 300%. Those are insane gains. But if you've been holding for multiple years, someone like myself, I'm up almost 1,000% on Tesla shares, and I'm not going to sell Tesla anytime soon. I'm up over 150% on Shopify shares. I'm not going to sell Shopify shares anytime soon. I'm up almost 200% on Upstart. I'm not going to sell Upstart anytime soon. I'm up massively on Palantir. I'm not going to sell Palantir anytime soon. You get the point. Trying to time the market, get in and get out and book these small little profits a little bit at a time is not worth the headache, and it's not worth the tax burden if you're here in the US. You never know if the next run-up for a growth stock is going to be that massive parabolic move. It's so much easier to just hold and increase your ownership every time we see a substantial dip, rather than sell when it moves up a little bit, buy when it drops a little bit, sell when it moves back up, buy when it drops a little bit, etc. So this is a cautionary tale to everyone to let your winners run. Don't be too quick to take a profit with these insanely massive growth companies. If you're dealing with a turnaround player, you're dealing with a value stock, and you get a quick 50%, that's a lot more enticing to go ahead and sell that 50% gain rather than a massive, insanely high growth company that's still expanding their margins, it's still expanding their product offerings, it's still expanding their EPS in a massive way, still expanding their cash flow in a massive way. The balance sheet's an amazing spot. You gotta let that growth stock run, and you gotta watch the story play out with it. So it's all love from me to Chicken Genius, and he's got that $100,000 of profit booked. That's good for him. He's $100,000 richer now. I'm just sad that he could have been $450,000 richer if he would have held until this past week, and potentially could have gotten way more profit than that if he was to continue holding for the next few quarters, next few years, maybe the next decade. But everyone's on their own personal finance journey. You sell your stock when you want to sell your stock based on the reasons you want to sell your stock. Whatever you want to do, go ahead and do that. But my advice would be let the growth stocks run, especially if they're in an amazing spot. They're still expanding and you don't see any weakness in the fundamentals. Just let that baby run. I want to hear what you're doing with Palantir stock. Are you selling, shorting, buying, etc.? Let me know in the comments below. I appreciate you being here and have an amazing day.